Hello, everyone. We are live. We are so excited to be here today for our Cannabis Investor Roundtable. So let us know where you're calling in from, what vertical you're calling in from, if you're an ancillary service provider or an investor. And lastly, we want to know what you're looking forward to learning about today. So regarding due diligence, investment opportunities, or maybe how institutional investors can invest in the cannabis space, future outlooks. So questions really help us guide the content of the presentation. So just be sure to drop any questions that you have into the chat platform of your choice, and I'll make sure that we address them during the presentation. So just going to give everybody a couple minutes here to finish joining, and then we'll go ahead and get started here. All right, awesome. Looks like we have some people jumping in. Great. There we go. Got Houston. Awesome. All right. Well, before we get started, I just want to read a quick disclaimer. So, the information contained in the presentation is meant for guidance purposes only and not as professional, legal, or tax advice. Further, it does not give personalized legal, tax, investment, or any business advice in general. So, that being said, I want to go ahead and jump in. First, I would like to thank all of you for joining us today for our Investor Roundtable. We're thrilled to have you all here to learn more about investing in cannabis and are so glad that you tuned in to hear from our panelists today. So, we're joined by many experienced panelists from a variety of disciplines and specializing in the cannabis industry. You can find the links to their websites and contact information in the description of this video, so make sure you check them out. Panelists, thank you all for joining us today. We're so honored to have each of you here and very much appreciate you taking time to share your experience, your advice, and your expertise today at our Cannabis Investor Roundtable. All right. So today, I want to go over our first panelist and do some introductions and read a little bit about each of our panelists. So I'm going to do some short bios here. So our first panelist is Matt Barron from 1212 Ventures. Matt is the co-founder and managing partner of 1212 Ventures, a cannabis-focused venture fund with over 100 million in AUM across two funds. Matt is a fervent believer in the power of legacy brands. He loathes inefficiencies and is passionate about connecting with good humans. He loves the fact that cannabis itself is much more horizontal than vertical industry, and it cuts across CPG, agriculture, healthcare, technology, media, and beyond in a very unique way. Matt began his career in management consulting before focusing on growth and strategy efforts for earlier stage companies in the healthcare arena. In 2016, Matt entered the cannabis industry as an angel investor to learn more about the plant and the blossoming industry. He is passionate about colliding ideas from disparate sectors and data sets to derive unique perspectives. Thank you so much for being here today, Matt. All right, our second panelist today is Tom Zuber from Zuber Lawler. Tom Zuber is a founder and managing partner of Zuber Lawler. Tom is a relationship partner for some 10 Fortune 500 company clients of the firm, as well as government entities. He also represents leading cannabis companies for 16 years. Zuber Lawler, as a firm, manages the highest stakes matters of a large percentage of the biggest brands in global cannabis. Zuber Lawler was also named Cannabis Law Firm of the Year by Marijuana Venture magazine, and Tom has been named one of the 100 most influential people in cannabis by High Times magazine. Tom is also the co-founder of the international cannabis consulting company Global Go and Cannabis magazine Global Cannabis Times. He earned a JD degree from Columbia Law School, a master's in public policy from Harvard University, and a biomedical engineering degree from Rutgers University, where he graduated with the highest honors. Well, welcome, Tom. Thank you so much for being here today.
Thank you for having me. It's great to see you. Great to see
A-
everyone.
Absolutely. And our third panelist, who's jumping on right now, is Graham Farrar from Glass House Branch. So I'm just going to read a little bit about Graham before he jumps on. Graham is a serial entrepreneur who began his career as part of the original team at software.com, taking the company public in 1999. Shortly thereafter, he served on the board of Ecology and was the founding team at Sonos, where he was involved with product design, development, sales, and customer support. After Sonos, Graham served as a board member for Heal the Ocean and was a founder of the partner of ebook publishers iStorytime Inc. Which was founded in Santa Barbara luxury rental company. He first ventured into the regulated cannabis industry by founding Elite Garden Wholesale, an agricultural technology company focused on developing products for the hydroponics industry. He currently sits as board of directors on the Santa Barbara Bowl Foundation. Well, thank you for being here today, everybody. Graham is jumping in right now. I think we were having a little bit of technical difficulty, so I'm going to jump off on the back end and help him out a little bit. But Derek, I'm going to go ahead and turn it over to you. Everybody, this is Derek Davis, our CEO and founder of GreenGrowth CPAs. Welcome, Derek.
Awesome. Thank you so much, Danny. And thank you both, Tom and Matt, for being here today. Really appreciate your guys' time. Matt, let's jump into you first. We'd love to learn a little bit more about you. Do you want to kind of give us a little bit of background on, your first cannabis deal and how did you stumble upon this space?
Yeah, absolutely. I entered the space as just a curious party. I had a close friend who was an Army Ranger, got blown out of a Hummer in Iraq. He was put through the VA program, opioids, antidepressants, painkillers, and it was a disaster. Beautiful wife, stunning children, and he was a shell of himself and just battled with the demons. A friend finally ran out of ideas and force fed him a 20 milligram THC edible. I never touched the stuff in my life. I've still never touched a cigar. I've never smoked a cigarette, and it unequivocally changed his life in a way that standard regular medicine didn't. So I began to explore the space. I put some personal money into a fund, and I reached out to the group and said, guys, I've done some venture investing, I'm, above average at math. Give me access to this space and these deals, and I'll just be free labor, right? I'll be a particularly enthusiastic LP. That fund was 25 million AUM, syndicated another 5 million from its LPs. It was the first money into a brand called Cookies, which is a very well-known brand based in California, but with global reach. As part of that investment into Cookies, the founding partner of that fund stepped in to run Cookies' day-to-day, just to add some corporate infrastructure and professionalize the business a bit. And they asked me to backfill and run the fund. So I stepped in to serve as managing partner of that first fund. And our current fund, we closed in August of last year, is heavily concentrated in that same brand, Cookies, as well as brands, businesses, and technologies within the cannabis space.
Awesome. And how did you guys pick Cookies as your first investment? Was it, was it the operational assets? Was it the team? Was it the market? Why Cookies?
Yeah, I think, when investing, you're looking for something different and something that has a moat. We believe that cannabis will ultimately look a lot like any other CPG business. That's where brands really matter, right? Where brands are a key differentiator. I think of Cookies a bit like I think of like a Jack Daniels, right? It was, kind of one of those brands that arose during the Prohibition days. It corralled what we describe as a community of passionate followers. And then it was able to transition from the Prohibition days with the authenticity and credibility of a higher level of quality into the mainstream, right? Cookies last year was recognized by Ad Age as one of the 20 hottest brands of the year across all sectors, right? Pfizer was on that. CPG, Chris, is consumer packaged goods. So think of like your Procter and Gamble's and the like. So Cookies has been able to transcend into the mainstream in a way that I don't think anybody else has at this point. And I think that is the result of its founder, a guy named Gilbert Milan Jr., better known as Burner. He's very charismatic. He's very gregarious. He's very smart. He knows how to run through P&Ls. But he's a bit of a torchbearer on the culture front, maniacally focused on genetics. So that in and of itself is a bit of a moat. But he came from the days when cannabis was illegal, and a lot of the consumers, there's a magnetism to individuals like that.
What would you say to a family office who's thinking about investing in cannabis, right? There's so many different plays. There's the brand play, there's, assets, there's limited markets. a family office that's thinking about getting into cannabis, what are some basic do's and don'ts of investing in this space?
Yeah, it's a really good question. To your point, I mean, on a state by state basis, it's remarkably different businesses, right? I mean, to your point, right? Florida initially issued 22 licenses. Only 4 of them were operational for the first number of years, which dramatically impacts the level of competitiveness that the operators in that state have had to deal with for a long time. California is far more open. The 4 of us could fly to Oklahoma City today and have licenses before 5 o'clock this afternoon. So be very thoughtful around where your potential investments are operating, who they're competing against. Make sure that they have a very sound understanding of what the competitive landscape is at the immediate moment, as well as what would be 6, 12, 24 months from now. Because I largely think that in our capitalistic oriented society, these false walls that are anti-competitive and limited licenses is just not going to last forever. And I think a number of companies have basically made it their strategic priority to compete in states where there's not a lot of competition. Be wary of folks that have bought marketing, bought progress, bought consumers, because it's an immensely difficult sector to operate in. Pricing is hyper volatile, and there's a significant amount of volatility as a result of it. Pricing, legislative progress and momentum can change on a weekly basis, right? Any whispers of legislative progress, you'll see a spike in the publicly traded companies' valuations. When those conversations get stale, you'll see that the prices in the pubcos drop dramatically. So look for something that's sustainable, look for something that's differentiated. And for us, the brands like broader CPG are where the greatest moat, the greatest price protection resides. So that's where we focus our allocating capital.
Now, with 100 million under management, do you guys do debt? Do you guys do equity? Do you do like a variety of things? Do you collateralize loans? Do you require personal guarantees? If you do debt, talk us through what you guys think about. What
yeah, great question. So we're a venture capital fund. So we are, our focus is on securing equity within the companies that we invest in. From a security standpoint, we do invest via convertible notes, right, which have the features of debt upfront, but then convert into equity either over a certain period of time, a change of control, or when that company is able to raise a certain amount of money, it crosses a financial threshold. So we'll do that. It really just depends on the maturity of the business, the leadership team in place, and really what the sort of competition and the investor market is for that deal.
Yeah, that makes total sense.
But we don't do any pure lending. We're not a debt shop. We don't do any pure lending.
Let's talk about if you guys were to do, how would you value an Arizona or an Ohio retail license where it's state capped, but it's still kind of maturing? What would you guys look for? Would you guys look at other kind of comparable markets with cap state retail back into their population and then try to arrive at a price, or how would you guys value like a new license in a new market?
Yeah, I mean, directionally, and it's probably shifting as we speak, just given the degradation of the right now. But generally speaking, dispensaries trade at about 1x trailing 12-month revenues. If it's simply a paper license, right, you value that typically just based off of what the market, what other licenses in that specific market are trading for. You can look at states with comparable population sizes. You can look at license prices over time as well to see how they fluctuate, right? So you'll look for a state with a similar population that's at a similar point in its maturation as the Ohio case study that you offered was. But you can, there's the good thing with retail and retail licenses is that there are a bit better analogs just in sort of franchise, broader retail that you can look to. Whereas sort of your pure brand analogs in publicly traded markets are a bit more art oriented than science. It's still just a very nascent category. So there just isn't an abundance of historical data. And again, on a state by state basis, the markets are so dramatically different that you really do need to dig into the data. You really do need to dig into the revenues that those companies are generating, how and why they're generating, and then the extent to which it's sustainable, particularly in the face of what we believe will be far more free market, open competition in time.
Let's say I don't know, 2 to 4 years from now, state legals or federal legalization comes in, interstate commerce opens up. What's the value there? So for example, you have state capped in Missouri cultivation, but then you have your next door neighbor, Oklahoma, just dumping product in your state. Who holds value? Who doesn't?
Yeah, I think if you look at broader agriculture, there's a concentration of production in a limited number of markets across the country, right? I'm originally from Chicago. I live in Northern California now. You can grow grapes. You can grow grapes in Georgia, but the best wine comes out of Napa and Sonoma. Oranges are primarily grown in Florida, right? I do believe that production will be concentrated in a limited number of markets, and that's going to be very problematic for a lot of these operators that have allocated significant capital into infrastructure in states that may not be as sustainable long term. Cannabis as a product can degrade, right? I mean, there is some level of utility in having regional or local hubs for distribution, right? But the volume of those, the inability to move product over state lines, save for clones that are still under that 0.3% THC content. Long term, I think that's problematic. We from an investment thesis perspective, we have avoided investing into infrastructure. We are not fond of hard asset plays at this point in time.
Interesting. And why is that?
It's long-term sustainability, right? We think that legalization, federal legalization, is inevitable but not yet imminent. And as a result of that, we've concentrated capital into brands that we think will be long-term winners. Cookies, for example, is very asset-light, capital efficient. Its business model is deeply similar to Coca-Cola, right? Think of Coca-Cola. Its IP is its syrup, right? It provides that syrup to third-party bottling partners, right? Coke bottling, publicly traded entities that turn that syrup into 2-liter bottles of soda, cans, cases. That's similar to the strategy that we've deployed with cookies, right? Allocate genetics to third-party partners who have invested in the infrastructure to purchase the land, buy the licenses, and then build out the facilities where product is grown, packaged, distributed.
Gotcha. So do you like to go after mature markets, Colorado, Washington, Oregon, where the brands have slugged it out and it's they've really had to fight for their market share and they've pretty much had to prove themselves, as opposed to a cap market where you have a lot more leeway with runway and profitability and all that other good stuff?
Yeah, absolutely. And I think, and again, not to be redundant, right? I'm not a California homer, but I do think that California is the strongest cannabis market. It's the oldest cannabis market in the country. It has the deepest bench of talent. I get pitches every single week from folks who say, they're third, fourth generation tomato farmers. Their great grandpa has run a cucumber farm for millennia, and it's just different. It's a very, very easy. It's a very easy plant to grow. It's an extremely difficult plant to grow very well, and it's even harder to grow it very well consistently. So we do believe that there's a concentration of talent and just history, authenticity here in California that's important. And because California's been competitive for so long, and the mantra of iron sharpens iron, right? I think that the operators here in California have the most exportable business models that we've seen for the most part. I mean, there's some fantastic operators outside of California, right? Cookies thoroughly vets them. We evaluate them as well from a venture investor perspective. There's great operators throughout the country, but largely I'd much rather see a company or a business that's done well in California and is deriving its growth in other states and markets versus having secured a disproportionate amount of market share in a limited license state, and then presuming that it'll be just as easy to gain market share in a market like California, Oregon, Washington, Colorado, or Oklahoma, because it's a slugfest. It's a very challenging state to be operational in.
For sure, for sure. Well, awesome. Well, thank you so much, Matt. Any last parting thoughts for any sort of family offices or anyone who's interested in investing in the space?
It's a really exciting space. Massive. It's an industry that's been around for thousands of years. It's still in its earliest, most nascent stages. Federal legalization is inevitable, if not, but maybe not imminent. There will be a one-time conversion from federally illegal to legal. We believe that the upside offered within this industry is profound, and are always amenable to talking to folks, even if it's just simple exploratory discussion about the space and what we're looking at. Appreciate you guys offering the platform to discuss and take questions from people.
Awesome. Well, thank you so much, Matt. Really, really appreciate your insight, and I'm sure a lot of the audience is really excited about getting involved in the space, and I'm sure they appreciate all your expertise here.
Absolutely.
Awesome. So next, I will bring it to Tom. Thank you so much, Tom. Really good to have you today. Really appreciate your time. I'd like to kick it off with the first question of, do you remember your first cannabis client?
I do indeed. This was Derek, and first of all, it's great to see everyone. It's great to see my friend Matt, and I thought he did a great job. It was back in 2006, Derek, which is ancient history now, but that really was our first client, and I'm thrilled to give a shout out to my buddy Kenny Morrison, who runs Venice Cookie Company. So this is a precursor to Kenny's very successful Venice Cookie Company, which makes Cannabis Quencher, which is a great, one of the leading beverages here in California, also known as CQ. So Kenny was my first client, and that was, again, a precursor to Venice Cookie Company, but it was Kenny that brought us into the industry, and we just started making friends immediately. One is a function of Kenny and folks he introduced us to, just kept introducing us to folks. There were no, Derek, as you know well, there were no bona fide corporate attorneys in the space. We were the only ones for like a decade. And so it's just this gift from God where this thing fell in our laps.
Were you helping him with IP trademark or helping him get out of jail?
Good question. We were actually a little of both. I wouldn't say we're helping him get out of jail, but I did get the midnight phone calls, like I just got raided phone calls. I mean, Kenny was and is a true pioneer in the industry. And so I did get those phone calls, and that was just the way it was back then. But it was deal work. He did he brought in some money, and others did similar things. Partnership disputes were occurring back then. People were starting to raise more significant amounts of capital. People were dealing with IP issues, and also just the cannabis regulatory issues, right? So all of that stuff was stuff that needed to be done. Back then, Derek, it was really criminal defense attorneys that started doing contracts and started applying for licenses. And so that was great. And many of them are still here in the space, and some of them work for us, and that's great. But also there was room for a bona fide corporate law firm, which we were back then and we are today, that really did the financing, the M&A, the Series A's, the IP work, the interstate work, the high-end litigation. That was really, we were the only firm, really, to my knowledge, that was doing it back in those days.
Yeah, for sure, for sure. Let's talk a little bit more about branding. I know you've done a lot of work around trademark protection, branding rights, and to Matt's point, he looks at brands that can spread throughout the U.S. very rapidly, low assets, low capital intensity. Can a cannabis brand be protected in the USPTO? Like, are there rights, or because it is still Schedule 1? Another company can just rip off the brand and have no sort of recourse or any sort of consequences?
So it's definitely not the latter. So there are things that you can do to protect your brand in cannabis, and there's quite a bit you can do, and it's awfully complicated. It's wonderful for us attorneys. We love to talk about this stuff. Our law firm has been at the bleeding cutting edge of this work, and very known for it, actually, in regard to helping cannabis companies get protection for their cannabis brands in relation to SKUs that actually matter. But let me give one example of the sort of conversation that's going on here. Obviously, folks know, well aware, that you can't get a trademark registration per se for illegal activity per se. The PTO won't issue one, and that's actually in the federal trademark statute. However, that's not the end of the matter. And our law firm says, okay, there's that, but what can we do around that can protect these brands? So let me give you an example. And this is an easy example, and it gets much more complicated from here. We don't have much time, but an easy example is you're a company that sells both hemp and you sell THC, right? So you can actually obtain federal trademark protection for your hemp brands, and you can put that you can submit that to the PTO and get a trademark registration for that. The trick is you really need to be clear that you also sell THC, because that's pertinent to the PTO's decision to grant you a trademark. That's potentially a fact that the PTO would want to know. And so those sorts of, you need to have a forthright conversation, but you can get protection for your hemp products. Now, let's say, for instance, that you have a hemp version of flower, a pre-roll, and you've got a THC version of that pre-roll. You're actually in not a naked place. You've got some protection here because there's a theory of law called the zone of expansion. So you could show up in federal court with a federal trademark registration for pre-roll hemp and sue somebody who's selling THC pre-rolls under a confusingly similar brand under the zone of expansion, because you're saying, even though we don't sell THC products today, there's some notion that it could be expected. It's reasonable to expect that we might expand into THC pre-rolls in the future. And so that under that theory of zone of expansion, you can actually win an infringement suit, other things being sufficient. So there's that sort of play. And there are other plays like that can be made. So really what it comes down to, though, is you really need to work with trademark attorneys that really understand the space well, because it's not enough to be an expert on trademark law and it's not enough to be an expert on cannabis. You really have to be an expert on both, having done both in the same conversation for many years, which we've done. And that really is the essential component of things. And you're going to have a conversation about long-term valuation of your brand, which really relies ideally on federal trademark protection and other forms of international protection. But also for cannabis companies will rely in the short term, in terms of enforcement in the short term, on state protection, because most likely if you're going to want to sue somebody for infringing your brand, you're going to want to do that in state court, because federal courts aren't as friendly, typically, other things being equal, to a cannabis company trying to collect revenues pertaining to cannabis product. So you're going to want to work with an attorney that's going to understand you need to really make a long-term valuation play by going after federal trademark protection in a meaningful way that the PTO is going to appreciate, with full disclosure to the PTO as far as what your cannabis company does today and plans to do in the future. And then also obtaining state trademark protection so you can do the short-term trademark enforcement.
Definitely. And along those lines, can a brand patent their genetics, right? They have some amazing genetics. They feel that they can license and launch these genetics in other markets. Is there any sort of protection for those cultivators?
Yes, there is. And in fact, I'll give a shout out to my colleague, Dr. Stefan Kurchansky, who's a patent attorney here at Zuber Lawler. But our team led by Stefan Kurchansky, Dr. Kurchansky, obtained the second plant patent issued in U.S. history for a cannabis strain. So the answer is a big fat yes. And you can also get, in addition to a plant patent, you can get utility patents, potentially on genetics as well. And utility patents are a whole different category of protection. So the answer is you absolutely can, and you should, assuming that your genetics really are a material factor in your revenue stream or your future revenue streams. And really it comes down to, okay, protecting, if you've got thousands of strains, and that's your business, I don't know that you want to spend money protecting all 1,000 strains. But if you're a cannabis company and you've got 1 or 2 or 3 strains that are really ideal to you, 3 sets of genetics, you absolutely want to protect that. In terms of dollars per return, it really makes sense to consider that.
Definitely. And speaking more to the investors, what advice do you have in terms of making their first investment in the cannabis space? What is the best structure? If they're a little worried about still being Schedule I, federally illegal, do you suggest them being, limited partners as opposed to general partners? Or, what type of guidance would you think is appropriate for someone who's looking to get in the space for the first time?
The first thing I would say is you really need expert advice. If you're getting into the space for the first time, you're going to want expert advice on several fronts. You're going to want, for instance, an accountancy that really understands the 280E and issues. So they're going to want to call my friend Derek to get hired, to hire GreenGrowth. And you know that they're going to want attorneys and consultants that are on board that really have that sophistication, Derek, that you have working with much larger companies, but also really understand cannabis itself and cannabis companies and the cannabis industry and cannabis accountancy and legal issues very well. So that's a key thing. Then going beyond that, I think what you're really looking to do here first is to understand that there are, as an example, if you're making investments into the space, due diligence takes on a whole different level of importance, right? Because if you're buying a company in a non-cannabis context, and I'll call it a traditional industry, you're not going to deal with issues like federal prohibition, right? And the things that and other sorts of issues that flow from state regulatory schemes and municipal regulatory schemes. So as an example, on when you're dealing with the transfer of cannabis licenses, right? In a typical context, you can use your house, or you can use real estate, or you can use IP to secure a loan or to secure an investment. And you can look at things and say, okay, well, in cannabis, it's a little different because sometimes folks find out that the company they've invested in or the company they've acquired doesn't actually own the licenses, or that there are problems with those issues. So as one example among many, many examples here, let's say, for instance, that it wasn't disclosed that there's a criminal, somebody with a criminal record, let me state that differently, somebody with a criminal record that is on the cannabis license, and that wasn't disclosed in due course in the context of getting that cannabis license. Well, you've got a problem there, right? Let's say also that there's cannabis licenses are somehow being used as security. There's all kinds of issues there, because how can you secure a loan, for instance, or otherwise secure another form of investment if there are strictures on the transfer of those licenses? So all of those things need to be dealt with. And those are just two among many examples here. So the real thing is, there are. I loved what Matt said, Matt Barron. So he's been in this. He's just really knowledgeable about the space, and I agree with him completely. There are huge windfalls here, and part of those windfalls are these challenges that we're talking about. So on the one hand, you may be listening to Derek. Folks may be listening to us, and they say, "Oh, wow, I'm discouraged. It sounds like such a drag." It's really the opposite. It's like amazing, because what's happening here is you've got an opportunity potentially to get true profits in the Adam Smith sense, right? In the Keynesian sense, because true profits only exist where there's an absence of information flow, right? That supply and demand is, and that happens in cannabis because of the prohibition veneer. If you've got the patience, if you've got the discipline to actually navigate this terrain with better dexterity, you're going to find that there aren't as many competitors in terms of making investments as there are in other industries. What does that mean? That means that there are more opportunities for investors. So it absolutely is worth it to hire somebody like Derek, to coordinate with somebody like Matt, maybe to hire a law firm like us to really understand this space better.
Awesome. Well, thank you so much, Tom, for your expertise, your insight. We really, really appreciate it. And I know the audience for sure will reach out if they have any sort of legal questions as it relates to their first investments.
Appreciate it, Derek. Thanks so much. Great to see you.
Awesome. Okay, next up, we have Graham from Glasshouse Brands. Really, really excited to have you here today, Graham. First question for you today is, when and where did you plant your first cannabis plant? I don't think the mic's working. Yeah, I think it's still down. Yeah, got you now.
Awesome. Thanks a lot for having me. I appreciate it. When and where first cannabis plant? First cannabis plant that I grew was actually probably close to 25, 26 years ago. It was a 6 square foot ebb and flood grow in my closet in Boulder, Colorado. I'd been using cannabis long before that, but buying stuff that other people had grown. I grew up here in Santa Barbara in California, so the norm for us in high school was down to San Diego. We'd pick up QPs in half pounds and bring it back to Santa Barbara and sell it in an eighths. My MO is to sell the less expensive cannabis, make a better margin, and go buy the good stuff for myself to smoke. I think I really fell in love with it even more when I started growing it myself. I'm a kind of a science and biology, molecular biology, biochemistry guy. And so the growing side, connecting it to something I loved and found enjoyment within the technology and the growing of it, really kind of cemented my love for the cultivation.
At what point did you cross that chasm of oh, I can actually do this professionally, because, cultivating way back in the day, it's probably right around when California passed Prop 215, but it was still a little kind of wonky. At what point were you like, oh, I'm going all in on this? This is like a true profession that will, really flourish.
Yes, that probably happened about 7 years ago. I was a tech guy prior, but all the while I was doing the tech, I was always doing cultivation as a side thing in the background. I went from the closet to the room to the garage to the house to multiple houses, and so it was never my full focus until about 7 years ago, which is when we started Glass House Farms. That was kind of right, Prop 215 had happened when we were growing in the houses and garages. And then you could kind of see Prop 64 on the horizon. It hadn't happened yet when we started Glass House. The first greenhouse, I think sometimes people think that we're, a big corporate thing. And the reality is we actually got big by starting small. So all the way back to that closet, our first greenhouse was 150,000 square feet. Not particularly big by agricultural standards. At the time, it felt giant, but these days it doesn't. And so that first farm led to the second farm. Then we started open dispensaries. We launched the Glass House Farms brand at the CPG side and stores. And then almost 1 year ago today, went public and kind of took all those things and put them together, and then started the next chapter of Glass House from there. Yeah,
that's amazing, and just such an incredible story. For a lot of the family offices and the pension plans that are looking to invest in cannabis, as being one of the top operators in California, what would you say are some key points they should look at it when investing, someone's 401k into various brands and different, cannabis opportunities?
Yeah. I mean, I could have, said ditto to everything that Matt was saying. I think he got a lot of things right there in terms of, the brands and California's prowess in that, and the fact that, tequila comes from Mexico, champagne comes from France, cannabis comes from California at least 8 out of 10 times, right? And so I think the cannabis culture, the expertise, the operators, the competitiveness are all super important ingredients to the long-term, kind of success of a company. And we're taking a bet that I might call it the antithesis of some of the MSOs, right? Where the MSO is oftentimes looking for a regulatory moat. They're looking for limited licenses, quasi-monopoly. They're looking for a place where they can come in and others can't. California is kind of the opposite of that, and our bet is the long term of what kind of comes next from that. I believe everything eventually is going to look like California. That the limited licenses and the oligopolies and things like that are going to go away. Anything that holds back people growing at home or consumer choice is a negative, and eventually is not really the philosophy of our country. And so eventually those things go away, and the competitiveness of California will move east, basically. And so those of us who have kind of, if you want to win the World Cup, practice with the other World Cup players, so to speak. So the bets that we're making is plants should be grown, cannabis should be grown where cannabis likes to grow. Southern California, it shouldn't be in places long-term like Massachusetts. Massachusetts, for example, 10% of the electrical grid is being used for cultivating cannabis. That electricity comes from burning coal. They're spending, $50,000 an acre in electricity to recreate the climate that we get in Southern California for free, right? So there's a reason California grows half of the agriculture in the U.S. It's because it is a great place to grow things. And eventually the walls will come down. I don't know when. I don't have it factored into any of our models, but we do think interstate commerce is the inevitable end result. Just like you don't have your, favorite wine from Denver or wherever you might be sitting. Just like Matt said, oranges grow in Florida for a reason. Cannabis grows in California for a reason. It's because the climate is great. We like greenhouses because greenhouses are tremendously efficient. They give you high quality at scale with low cost. They're amazingly efficient with water. So for example, our greenhouses, an average greenhouse will use like 50 to a tenth, half to a tenth the water of an outdoor field. At our greenhouses, we actually capture all the water the plants don't use so that we can sterilize and reuse it, which means basically it's as water efficient as you could be. It's also less water intensive than the crops that we replace. So like at our current farm, it was tomatoes and cucumbers. We use about a third the water of those crops for cannabis. So, good on the waterfront. We have on-site solar power. We don't use HVAC because the climate's great. So we think this is the long-term play for where cannabis ends up. So, pension funds are long-term, to come back to your question, are long-term investment vehicles. I would encourage people, play to where the fundamental building blocks are winners, right? Play to where the climate wins, play to where the culture wins, play to where crops grow, because eventually the MSOs are going to be store shelves. And we would like to be, growing everything we can in California and putting it on those shelves across the country is the eventual end state we see.
Definitely. And that's such an inspirational story. Going from small startup to IPO, it's such a tremendous accomplishment. What were some of the major setbacks that you guys experienced from point A till where you are today?
Yeah, so I think going public has an entirely new layer. Cannabis is interesting. It's one of the few markets where you go public to build a business versus building a business and going public, which is kind of what you do everywhere else. And that's a vestige from the federal illegality and the fact that capital is not efficient in this space. But so it is, if you want to do the big things like we're trying to do, being public is one of the few ways to raise that amount of money. And the cannabis sector, from an investment side in the stock market, has been tremendously challenged in the last year. So I think that was it's really, and it's an interesting dichotomy, because from the actual market and the progress, it's tremendous, right? Like 2 more states legalized adult use, Rhode Island and then Connecticut, like in the last month. And it's almost like people don't mention that we went from 18 to 20 states, and we went from 38 states that have something to 40 states. And, the markets are building, and, all this stuff is happening progress-wise, but you don't see it reflected at all in the capital markets. I think because people are overly focused on federal change and under-focused on state-led progress. I think they're waiting for regulatory reform, and that's been much slower than everyone thought. Even with the Dems in the House, it hasn't really gone anywhere. So, that's been a kind of an unexpected challenge, I think, for many people, is that progress hasn't been faster. It doesn't reflect the actual progress that the industry is making. California market's also a challenging market. I think this market sucks until it's great, and I think that will happen. But right now, it's overtaxed, it's overregulated. There's not enough retail doors, and so that's I think again progress is just kind of slower than expected on that front, and that's challenging for everybody. But valuable things are rarely easy, and the idea that we're going to build a $100 billion industry and it was going to be quick or easy is probably a misnomer. This is a place for an investment, not for a trade, and I think we recalibrate to that. We see, we're making generational change and massive societal change to the positive, but that's not always a quick process.
Yeah. Could you speak to that a little bit more with regards to, California just being such a kind of crappy market to be in? How have you guys been able to survive, and not only survive, but thrive in such a, just an unfriendly business environment state?
Yeah, California, it's interesting. California is the single largest, and I think best cannabis market in the country. It's the 5th largest economy in the world. It probably represents about 25% of the entire nation's cannabis market. It's bigger than the next 2 combined, and almost as big as the next 3 combined, which includes New York. So it is just an absolutely massive market. That said, it's also a very competitive market, which means it's not easy. I think that's both a challenge and a benefit, right? Like in Florida, if you have the 8th biggest brand, you're last, right? In California, if you have the 8th biggest brand, you're ahead of 19 other people, right? And that's a very different place to come out of. So I think it's the natural selection, it's the petri dish, it's the evolution, it's the incubator. However you want to say it, right? It's like it's where 8 out of 10 brands are coming from. But today it has the same number of dispensaries about as Colorado, but it has 8 times the people, right? It's the wrong number of stores. Prop 215, things work pretty well here, right? So I think the good news, bad news about that is we know that the market can work. We also know that the regulation's broken, right? There's 11,000 liquor stores. There shouldn't be 800 dispensaries, right? Oklahoma has 2,000 dispensaries, 1/10 of the people, right? Colorado, Oregon, Washington all have about 1 dispensary per 5,000 people. California's got 1 dispensary or 1 legal dispensary for every 10,000, every 40,000 people, I'm sorry. So, 5 times the stores like we should have. I think the California market would be a lot better. Cultivation tax should be going away in about 2 weeks. That'll be helpful. It's going to not be enough. The excise taxes and other local municipal taxes are still too high. The fact that 60% of municipalities still don't allow retail is a broken number. But I think less taxes, more retail will solve most of the problems. The rest is just kind of a rebalancing of a free market and a process that you've seen Colorado, Oregon, and Washington go through, and California is going through it now. And I think it'll sort itself out, because at the end of the day, people smuggle California cannabis into states that have legal cannabis. It tells you what the people want. They want California weed across the country, and they're going to get it. And when that time comes, I think it's going to be a great market for everyone.
So for future growth for Glass House, are you guys going to wait for interstate commerce to have your brand spread throughout the U.S.? Are you guys thinking about opening up new facilities outside the state, albeit though California is the best place to grow? There's a kind of like push and pull here. What are you guys thinking in terms of future growth for Glass House?
Yeah, so good question. So we're pretty focused on California from an operational point of view. I wouldn't expect to see us opening up, farms in Florida and things like that. That said, we don't forecast. We don't have anywhere in our models where we're saying, hey, we're counting on interstate commerce to happen by here. We do think it'll happen, but your guess is basically as good as mine in terms of how long that takes. So, right now, focused on California. It's the single biggest market. If there's anywhere I could be, this is the one. But I do think licensing is a tremendous opportunity, right? So Plus Gummies is one of our brands. It's a top 4 edible brand in California. Again, in California, being in the top 5 actually means something. It's not like some of the states where there are only 5. That means that it's persisted over time and people like it and it's got a loyal following. That is a great licensable brand. So I think it's a great brand for both medical and recreational markets because of the ratios of cannabinoids it has. It can go all the way from fun on a Friday night to, helping you sleep on a Tuesday. There's a bunch of stuff we can do. It's now connected from plant to product, at least here in California. So, that's something that we could export. Our field extract brand is something that could be licensed. Forbidden Flowers, our brand there, that's kind of more product forward, could be licensed. So, I think there's going to be a bunch of opportunities to bring California brands to other states ahead of actual interstate commerce. And we'll definitely be looking to capitalize on that.
Awesome. Well, thank you so much, Graham. Really, really appreciate your time today and all your expertise. And yeah, Glass House is definitely the biggest brand in the state. So really appreciate your time today.
Yeah, thank you very much for having me.
Awesome. Well, welcome back, everyone. I know we're about to wrap up in about 10 minutes, but we have a lot of questions that came in. First question is, how do you determine the valuation of a business in your cannabis sector, and how does that differ depending on the vertical you're in and if you're vertically integrated?
I mean, the short answer is, yeah. I mean, you got to look at. Typically, it's based off of multiples on revenues or EBITDA. You look at what deals we're transacting in that particular sector. You can borrow analogs from publicly traded companies, but it's a very art-oriented deal, and it varies dramatically, not just on a state-by-state basis because of the legal infrastructure can vary so dramatically, but on a county-by-county basis as well. But the companies that get the best deals have high rates of growth and are profitable, right? They're able to keep their heads above water, independent of outside cash.
I would add something to that. I think that's right on, of course. Also, I would suggest looking at context, right? So it's not just the asset that you're looking at, but their context. So as an example, if you here in California, we've spoken a bit about how challenging it is here. The licenses are obviously widespread here. It might have been Graham or Matt said they could, decide to get a license in this municipality or that one today and have one by 5 o'clock. And I think that's true. On the other hand, if you go to a state like Arizona, if you get a license there, well, you've got a lottery ticket of sorts, right? So, and there are things in between that. Oklahoma, I guess, is even further than California in terms of the potential just to easily get licenses, and throughout the state, actually, it's even way further along than California. So I would look at context. What's the competition there? How widespread are the licenses? And also, one thing to think about is just how quickly fortunes can turn if the state issues more licenses, right? So you've got a limited license situation, you acquire a license, it's worth this today, but then the state comes out and says, we're gonna issue a whole heap of new licenses tomorrow. What happens to the value of that license? So I would caution to look at context as well as the target itself.
Absolutely. And maybe this question is more geared towards Graham. How do you guys think about, San Diego County, very, very large agricultural county that I believe is gonna go unlimited licensing in the new year? That's going to just continue to drive the price down. Do you guys worry about, new large California agricultural, sections of the state that are going unlimited, or do you not really worry about that so much?
I mean, in general, I'd say we believe in the free market, and so the idea that regulation, like I would never encourage anyone to ban home grow. I'm not a big fan of the limited license model where the accomplishment is making it, who and making it through a regulatory mode and then having artificial supply. I don't think that's great for business. I don't think it's great for consumers. So, philosophically, I think that people should win or lose or find their place based on a free market. So I wouldn't say, that we worry about it. I think it should be open. And I think that the market sorts out who can deliver the highest value, right? Like who can deliver the highest quality at the lowest cost. That's what the market picks. The beautiful thing about cannabis is there's a lot of ways to do it, and none of them are necessarily wrong. There's also a lot of places where quality and cost intersect. It's not a one size fits all, right? So, I sometimes, I use the tequila analogy, use it here, right? Like someone being 1942 is great, right? Someone being Jose Cuervo is great. I'd like us to be the Casamigos of cannabis for the Whole Foods consumer. That's kind of the lane that we're trying to go down. It doesn't mean either one of them are wrong. It just means you got to find the place where quality and cost intersect. So, I think that if it was up to me, I'd be focusing on municipalities opening retail as a priority over municipalities opening cultivation. But I wouldn't say that they shouldn't do it. I just say, we have 700 stores and 7,000 cultivation licenses. If those numbers were balanced, everybody would be a lot happier.
Absolutely. Absolutely. I know we're about to wrap up. Just one last question for all our panelists. What final thoughts do you have to leave with our viewers today? Maybe share one key piece of advice that you think every cannabis investor should know. We'll start with Matt, then we'll go Tom, then Graham.
Thanks, Derek. Take your time. Find folks that you trust, right? I mean, I met Tom over 3 years ago. We sat next to each other at an industry event down in Santa Monica. Got to know each other well, and introduced Tom to Mike Moulton, Tom, right, and Cookies' legal counsel, and pursued opportunities as a result of that. Graham and I got to catch up 2 weeks ago in New York at the Jefferies Cannabis Summit. Find folks that have a differentiated approach to investing in the space, or have a differentiated, protectable business model. Because I think that offers you the greatest opportunity for upside. I'm unequivocally biased, right? I run a fund. I think if you're a new investor in the space, it behooves you to at least talk to fund managers, because they're evaluating so many different deals so frequently. There's a lot of folks that can put together a compelling pitch deck, but not have the operational chops behind it. Folks like Graham and Glasshouse are really good at what they do. I'm not pandering. The union between legacy operations and legacy skill sets in this particular specific industry, partnered with financial chops, partnered with engineering, partnered with botany experience, is immensely powerful and very, very rare. That's defensible. That's sustainable in the long term. I wish everybody the best, but I just don't think that everybody's going to make it as this industry continues to mature, and particularly when big tobacco, big pharma, big CPG enters the space. It's going to be people with industry-specific skill sets that have the intellectual honesty to partner with other folks who round out their executive teams and can just execute. Long-winded, guys. Apologies.
Not at all.
It's great. Great answer. Yeah. I'm happy to. I think I was next, Derek. I agree with every lick of what Matt said. I think particularly that note about having that sort of legacy cannabis experience. It doesn't have to be legacy, but really bona fide knowledge of the plant, of the industry, of all the issues that are particular to cannabis. It is a wonderfully funky subject matter, but also having that non-cannabis corporate expertise, if you will, where you've actually taken a company from being smaller to being public, for instance, and surmounted all of those hurdles. When you combine those things together and argue over the past, 16 years now, The companies that we've seen succeed, we've seen many companies go out of business. We've seen some companies, quite a few actually, that started very small with us and they're now billion-dollar companies, right? So we've seen both sides of that. You typically see both. I think, frankly, always you'll see both categories of expertise. You'll see that cannabis expertise plus that traditional industry corporate gravitas. And when you combine those two things, it's powerful. I'd say in addition to that, I would say get ready for the unknown in cannabis. So one thing is the personalities in cannabis. You are dealing with a legacy context here. To be clear, before it was a legal industry at the medicinal level in California, California went online first, of course, at the medicinal level. It was illegal across the country for centuries, right? And so that legacy really still informs investment into the space today. So there are personalities, and I'm not saying malicious personalities, I'm just saying personalities that perhaps aren't as reliable, right? And so that I think is something to take into account, where you're looking at who's sitting across the table for me. These are going to be, if I'm doing an acquisition here, if that's that type of investment, these are going to be my colleagues. And do I want these people as colleagues? And I would honor the red flags early. So if you find people and they're not showing up for meetings, they're an hour late, that sort of thing, where are the records? I'll find them, and then it's 3 weeks later. Run is my suggestion to you, unless you're getting a rock bottom price where that sort of those unknowns are incorporated into the purchase price. Run as fast as you can in the other direction. And I think more and more of our clients are having that discipline where they're willing to walk early, where you find out that the personalities, the records aren't in place. You're like, okay, there are other opportunities here, and I'm going to find the grownups in the room, or else I'm going to get a price adjustment that adjusts for those unknowns.
Yeah, I think another good answer, right? I mean, the summary is it's the people, and it's always the people. But in cannabis, I feel like it's really the people. You know, the reality is we're building something new here, or at least doing something that we've been doing for a while in a new way. And so nobody really knows what the fuck they're doing. So find good people to figure it out with is the key piece. And also, it's early, right? And it's going to go slower than I think anybody thought it was going to. We, especially in the industry, see the inevitability. We see the benefit it has for society, for jobs, for taxes, for social justice, for social equity. Like all these things, they seem so obvious that how could it not happen? And I believe it will happen, but it is a process and it's slower than you think. So where you think you might be late, you're probably not. Where you think it's going to happen tomorrow, it probably won't. You know, I think if I could be anything right now, it would be somebody just stumbling into the space, because frankly, the industry is the furthest along it's ever been. There are more cannabis consumers today than there ever have been. There's more legal states than there ever have been. There's more progress in legislature. There's more progress in DC that there ever has been. Yet the investments are trading at all-time lows, right? So it's like, if you could just be showing up right now, I think you're the luckiest investor, family office, et cetera, out there, because you're getting the best value with the most growth potential that we've ever had. And I think that's the short term, the markets are a popularity contest. Long term, they're a weighing machine. We're still in the popularity contest. Cannabis is out of favor. Long term, I think it's going to be an absolute beast.
Awesome. Well, thank you so much, Matt, Tom, and Graham. Really, really appreciate your insight. I know we have quite a bit more questions that we don't have time for today, so we'll circulate some answers later. But yeah, thank you again so much, guys, for your time. Really, really appreciative on this side.
Thanks, Derek.
Thanks for having us.
Really appreciate it.